You know, American fast food chains are, well, they're a global juggernaut. They've conquered markets on pretty much every continent, becoming this huge symbol of globalization. But there's this one vibrant, food-obsessed country where the golden arches have just famously stumbled. So today, we're going to dive into the mystery of why these absolute giants couldn't crack the Vietnamese market.
Okay, first let's just wrap our heads around the scale we're talking about here. McDonald's has over 36,000 locations worldwide. I mean, there's one inside a decommissioned airplane in New Zealand, another one literally inside Vatican City. It's a brand that feels unstoppable, a $500 billion industry that seems to be everywhere.
And then you have Vietnam. Out of all those thousands and thousands of locations, only 17 are in this nation of nearly 100 million people. That's not just a small number. It's a massive red flag that tells you something is fundamentally different going on here.
So how did a brand that totally mastered global expansion just fail to get a foothold in one of Southeast Asia's most dynamic economies? It's a really fascinating puzzle, and you know what? The clues are kind of hiding in plain sight.
Now, you might be thinking, well, maybe they just didn't try hard enough. But that couldn't be further from the truth. When these brands showed up, the hype was massive. They came in with big money, even bigger plans, and they were fully expecting to just replicate their success from everywhere else.
And this timeline, wow, it tells such a powerful story of ambition versus reality. So back in 2012, Burger King says they're going to open 60 stores in just 4 years. A couple years later, McDonald's opens these huge crowds, planning 100 stores within a decade. And the reality today? Just 13 and 17 stores. That initial excitement just completely fizzled out.
And what's really interesting here is that this isn't some Asia problem. Nope. These exact same brands have thousands of stores in places like China and Japan. I mean, McDonald's is the second largest foreign fast food chain in China. So this failure is uniquely Vietnamese, which makes this whole puzzle even more compelling to solve.
All right, so let's play detective. Let's break down the clues that reveal exactly why the American fast food model just did not work in Vietnam. Clue number 1. The whole reason American fast food exists, speed and convenience, was completely irrelevant here. First off, just look at the price. A Big Mac is around $5. A local banh mi sandwich, you can get one for less than $2. But the real kicker, the thing that really changes the game, is speed. You think McDonald's is fast? You have not seen a Vietnamese street food vendor in action. They are on another level.
This quote just says it all, doesn't it? The entire point of fast food is defeated by the local food culture. Why would you wait in a line at McDonald's when you can get a delicious, fresh, and way cheaper meal from a vendor on the street in just seconds? The local competition had already beaten them at their own game before the doors even opened. Clue number 2 is just the sheer overwhelming scale of the competition. There are over 500,000 food outlets in Vietnam. And when you look at the breakdown, it is staggering. 430,000 of them are local street vendors. Fast food chains, they're that tiny little sliver, just 7,000. They weren't just competing, they were completely, utterly outnumbered from day one.
And here's our third clue, and this might be the most important one, a deep cultural mismatch. In the West, you order a burger, and it's for you. It's an individual meal. But in Vietnam, eating is this deeply communal, family-style experience. You get a bunch of dishes, and everybody shares. So a burger, well, it's a tough sell, because it's not really a food you want to share, is it?
But hold on, it's not like it's impossible for a foreign brand to succeed. And this is where our story takes a really interesting turn. See, some brands figured out that if you can't beat them, you got to join them. You have to play by the local rules.
And the market share data tells the entire story. Look at Pizza Hut and KFC. Both of them adapted their menus, and together they command over 30% of the market. And then you have McDonald's and Burger King with their very limited changes, stuck with a measly 2.8%. The data is crystal clear. Adapt or fail.
KFC's journey is the perfect case study. They showed up in 1997 and struggled badly. For 7 years, they only managed to open 10 restaurants. It was a total failure. But then they changed everything. They localized. They introduced stuff like KFC chicken rice and shrimp burgers, dishes that actually made sense to the local palate. And the result? They've now grown to over 130 stores. They learned the lesson that McDonald's just didn't.
So, where does all this leave us? Well, all the evidence is pointing to a pretty clear and final verdict about the future of these burger giants in Vietnam. And let's just say, the trend lines are not looking good for them. And this right here might be the final nail in the coffin. It's the customer data itself.
Between 2016 and 2018, customer traffic to fast food chains dropped by a staggering 31%. And where did those customers go? Traffic to street food vendors surged by 70%. People were actively, consciously choosing local over global.
So, let's just quickly recap the whole story. They were too expensive for an everyday meal, they weren't actually fast by local standards, they were completely drowned in a sea of competition, and their main product just didn't vibe with the communal dining culture. It was basically a perfect storm of failure.
And all of that leaves us with one final fascinating question to think about. In this age of ever-increasing globalization, the story of McDonald's in Vietnam is just such a powerful reminder. It really makes you wonder, can a standardized global menu ever truly, really conquer a deeply ingrained and beloved local palate?